Traditionally, stocks rise as investors dump money in. The market capitalization increases and thereby increasing the share price. In modern times, however, everything is controlled by computer algorithms. Insider trading has become commonplace. Central banks are even buying shares of the stock market. There's no way to know if there is any real qualities left in the stock market whatsoever. Too many questions and too much at stake. You came here for the truth. Today, we are going to talk about the pump and dump. Before we hit the flush, I just wanted to discuss the fact that I'm going to talk about the Snapchat specifically, and then I want to connect that in with the much wider economy. I think it's very important to address the real economy, what's happening. You need to know that everything's not just rainbows and flowers, although sometimes it can definitely seem that way. How to spot a pump and dump. I'm going to very briefly cover this. It's talking about Bernie Madoff, talking about Ponzi schemes, and then this is the pump and dump. It involves the building of feverish excitement around a tiny company in such a way that insiders can unload worthless shares on suckers. And while they suggest that it has to be tiny, I don't believe so. With the introductions of, on, let's say, the surface level, we have the mainstream media, and we also have social media, which can push that element to a much higher degree. Then you have, of course, all the computer trading and everything else that can decide what any stock will be priced at any given time. I'll stop right there. Basically, it's a way to have certain investors put their money in at the beginning. The stock rises dramatically, and then all the good money, smart money gets out, leaving all the suckers there. That's just one example of how this works. Let's get into this. Snap on, snap off. Shares of Snap plunged below $24 for the first time on Monday. I'm not saying that this is necessarily a pump and dump. Let's be clear here. But right away, we are seeing what happens all the time. Everybody's so excited. Okay, it's at $24 at this time. It's going to be great. This is the greatest thing since sliced bread. So it goes up. And people are really excited. People start dumping their money in. You see a lot of people buying in here. You see a lot of people buying in here and even here. And they're waiting, although that's, head and shoulders pattern coming down. And they're looking, all the tech, all of these technical analysis. And they're forgetting why they're in this in the first place. What is it about this company that you need to invest in it? And do you want to dump a large percentage of your savings into one particular stock, hoping that it's going to rise and rise and rise just because you use that app or you use that software and you think it's so great that you should dump your money in? That's not how this works. I need to do a video. I talk about it in my book, but I really want to do a video of diversification, how you can personally diversify. At this time, I do not recommend any paper assets, but perhaps there is a time and a place for it. And at least if you're going to do it, you should know how to. And essentially, what I recommend is if you are liking the tech sector, that you would put not, you buy shares of Apple and that's it, I'm invested in tech. No. If you want to invest in Apple, you can put, let's say, 60% of your money for that piece of your portfolio of tech stocks. Of course, you should have 100 different things in your portfolio. But if you wanted to get into this one in particular, you would purchase, let's say, even heavy weighted 60% into that particular stock, and then you would split up the remainder in, let's say, Snap. You wanted to add a little bit of that, so maybe you put in 5% out of that remaining 40%, and then a little bit of Oracle, a little bit of Amazon, a little bit of this and that to make up the remainder. And why do you do that? Because if one fails, then you're not going to be screwed. You're going to lose, a few percent instead of losing everything. And that's the thing that people make the mistake of. And that's why I see this as being dangerous. Any IPO, people are just trying to get into the fury. They're thinking, you know what, I missed the IPO on Google and I'm just made a big mistake. So I'm going to dump my money into every IPO that comes out, hoping that this is going to be the next Google. And that is a very dangerous proposition. Just want to show you just quickly. Here is the stock from Google Finance. It looks a little different here, but essentially what you have is a 12 and a little bit percent decline. That's a serious decline for a lot of people to take, particularly when they've invested too much money. A lot of people just do this as a gamble, thinking they're going to get the next biggest investment, and it might go up. But a lot of people are not sophisticated. They simply dump their money in, and they don't know the truth about what's going on behind the scenes. Economic preparedness. I want to switch gears here. People, despite the fact that they'll dump their money into Snap, they'll dump their money into Facebook and everything else. Look at this. This is actually, surprisingly, out of the Federal Reserve's own website. I found this report that they've done. Nearly half of all adults are ill-prepared for a financial disruption and would struggle to cover emergency expenses should they arise. How many times have you heard me say that? Countless. Has it been 1,000? Probably. It's probably been about 1,000 times. Annoying everybody over and over and over again talking about this. But now we have more stats to add to that. 46%. 46%. Half of adults say they either could not cover emergency expenses costing $400 or would cover it by selling something or borrowing money. You don't have $400 to your name, you're in trouble. Now, if you were totally prepared, you had the solar panels, you had the water catchment, you had all of these different preparedness items in your house, a water filter and everything else, and you didn't have $400, you'll be okay because you're ready. You're ready for it. But if you live in the city, you're working a 9-to-5 job, and you lose your job, and all of a sudden, your fridge breaks, your stove breaks, and you have an unforeseen medical expense, what are you going to do? Well, in this case, you're going to try and sell something, or you're going to borrow money. And that is what half of people are saying. Half of people. The bottom paragraph, 22% of respondents experience a major, unexpected medical expense that they had to pay out of pocket in the prior year. 46% of those say they had that, currently owe debt from that expense. Think about that. Think about how serious the situation really is when this is what we're talking about. Can't have $400 if you need it desperately. You have to borrow it. Then you incur debt. Then you're paying interest. Then you are a slave to the economic system, to the monetary system. This is the program designed to keep you in chains. That's why I developed the Money GPS strategy specifically to get people out of this, because it makes me sick to think about a system designed specifically by the few, the powers that be, the globalists, the elite, whatever you want to call them, that they sit up there on their high horse in their thrones wearing this crown, $1 million crowns on their head, telling you and I what to do, stealing wealth from you and I, siphoning it away, when all we want is to just deal with our own issues. But every day we got to go to the 9-to-5, grind ourselves to the bone, all because of this monetary system. So we need to evade it altogether. Sorry to segue there. Let me just quickly move on. Americans and their unexpected expenses. This is just a graphical display. Anytime I can find graphs, charts, diagrams, anything like that, I think it's important to show people, because most people, in fact, are visual learners. 3 out of 5 Americans had a major unexpected expense in the last year. Car trouble, home appliance repair, and illness, the most common causes. 41% of them will turn to their savings to pay for their unexpected costs, and it goes on. Basically, what we have is a very, very serious scenario of people really redlining, and that is dangerous. This here was something that was news to me. I mean, I knew some of this, but not all of it. Beneath some positive stats, shopping malls are facing serious problems that threaten their health, including a shift to non-retail tenants and forecasted rent declines. You've seen the statistics about consumer confidence being at highs they haven't been at for the longest period of time. Then you see this, and I believe this is the true information. Consumer confidence, I don't see, at least I've never seen, to be a real stat. I think that that is a number that we should never look at. I've never been able to match up, to correspond the data between consumer confidence and the economy. So me personally, I don't like to look at it. Wells Fargo stresses the need to look deeper at high mall occupancy rates. What we will see here is that they suggest that mom and pop shops are not a good thing. Which I tend to disagree with. I think it's a great thing. Anyway, they suggest that. They basically said that they're getting a lot of these non-retail tenants. So what are they talking about, non-retail? Well, check this out. Non-retail uses such as doctor's office, town libraries, and even a high school. So they're looking for real estate, maybe this high school in this case, and they look around and where can they get a cheap way to get in. This happens to be the case. If this mall is struggling and they have the space available, they can do a deal. And that's the way this is working. But if there were stores that people wanted to come into to buy things, those stores would open up. But that's what's changing. Yeah, the mall can be busy because you have a bunch of kids in school. You know, it's a much different scenario than the kids coming to the mall after school to buy things, to buy food, to buy clothes, to buy this and that. Very different scenario, and I believe that the economy is really showing its true values right here. The number of babies born in Italy hit a record low in 2016. The population shrank, and the average age crept higher. This has been a trend year after year after year. Italy is just one. There's a lot of countries actually in Europe that are suffering. And you look at Japan, obviously huge problem. And then you look at other places which, to me, they're alarming, but not necessarily to a lot of, the statistics exactly don't show that. But when you look at anything less than 2.0, look, if a parent is only going to have one child, it's not, the replacement rate isn't there. So you need to have a minimum just to keep things going. If you think about it, parents would need to have a minimum of 2 children. That's just the way it is. But what happens when they don't? Well, you have this crisis. Forget about, everything I talk about on this channel. Just like normal everyday economics. If they don't have enough people paying into the Ponzi scheme, you're going to have a big problem. Bernie Madoff and Ponzi himself knew what this is all about. And the government uses this exact policy when they have these, all the social assistance programs that are designed to take from the people and then give back in a trickle fashion to some people, but ultimately keeping most of it for themselves. And that's the way this works, a bureaucracy ever increasing. This is a disaster waiting to happen. I believe even Robert Kiyosaki wrote a book about this. And it's just an inevitable fact. You don't even have to have a global economic collapse in the way that I suggested with derivatives and everything else. You just have general looking at the numbers, this is an absolute failure waiting to happen. It's already redlining. They already have trillions of dollars in intra-governmental debt. What are you going to do? U.S. airport pat-downs are about to get more invasive. Can they get any more invasive? I won't get into the article. I just thought it was very interesting. If you've ever flown and tried for the pat-down, I've done this before. I've had the TSA say to me, have you ever had this done to you before? I said, yes, in Toronto's Pearson Airport. And they said, well, it's going to be a little bit more invasive than you're used to. Actually, that was his words. And the individual got real friendly with me. But ultimately, it was better than going through the cancer machine, so I chose that. Ultimately, I see it to be a problem, though, because they're just using this as a way to grow people, and they're really, really grabbing people. I mean, it's just the way it is. And you see a lot of the seething workers just loving it. It's really crazy. Now, of course, not all the workers are doing that, but you see a lot of that, and it is increasing. You see the talk about that happening. People, TSA agents stealing from other people. They're leaving notes for them saying, you know, that was enjoyable and all this sort of thing. I mean, it's crazy. It's disgusting, and I see it to be as a way to encroach on people's freedoms. They want to, you know, a lot of people that go through the scanner end up having to get a pat-down anyway in the end. My suggestion to everyone is to take the pat down, slow down the line as much as possible, and try to really put a jam in the system. I think it's crazy. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it pushes these videos higher up in the YouTube search ranking, so I do appreciate that. Last but not least, if you found the video informative, I know you will find my book, The Money GPS, even more informative. You can actually look through the book. If you go over to Amazon, they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care.